Welcome back, CTKS students and elite service members. In news today, the US delays tariffs on Canada and Mexico USMCA compliant goods. Unfortunately, the markets were not happy at all. They sold down quite significantly. Let's have a look how the market sold down. Nvidia got hit, Amazon and Tesla. Meta got hit and the banks got hit for a 6. But energy was not too bad, at least in parts. We can also see in the crypto market came down in the past trading session. A little bit of green in pockets, but overall the markets were red. I'm going to explain exactly why this happened. And it's all to do with the cheat sheet. Let's run the numbers. Just a quick update for the elite service members. All of these indicators have been released on TradingView. These 7 rows comprise the cheat sheet, and we look structurally and directionally for the momentum across these different rows. Especially important is row 1. Row 1 is confirmed or denied by row 2. Row 1 is giving us the indication why the major market indices retraced and pulled crypto with it. We've seen Bitcoin and crypto come down just recently, as well as the stock market, because the VIX spiked up. This is a row 1 measure. Row 1 is always about risk off. If we're seeing the DXY spiking up, and especially the VIX spiking up, that's a recipe for problems. And you remember from yesterday's video, I was saying that the DXY is likely to retrace because it's got so much structural underpinning support, it can't do anything but bounce, and that is exactly what it did. Now, when the DXY bounces, it makes everything relatively more expensive, and that bounce up causes asset prices to come down. It puts negative price momentum inside the stock market, commodities, and also the crypto market. The market is definitely in a degree of turmoil. What I've just done is invert Bitcoin's price across all of the row 1s. Now, what you can see is that typically we get an inverted relationship with the yields and Bitcoin. We're not seeing this at the current time, either on the 10-year or the 2-year. But we are seeing it, and it's been maintained with the VIX for quite a degree of time. And the dollar is starting to come back into directional correlation as well. The economic system is in a real degree of flux at the current time. And when we look at row 2, which is the VIX counterpart, which is junk bonds, the euro dollar, which is the counterpart to the DXY, the Aussie dollar, which you could say is the counterpart to the dollar yen combo, as well as commodities such as copper, silver, and gold, we can see Bitcoin, just on a normal scale, is directionally correlated with the commodities. Now, this is pretty good stuff because we anticipate a commodity super cycle. And the fact that Bitcoin is talked about as digital gold is not such a bad thing. We've seen junk bonds come down in the past trading session, which was the counterpart or the inversion of the VIX coming up. Note how Bitcoin reacted first. And this is what I've always said about Bitcoin. It is the canary inside the coal mine. It's the thing that you must keep your eye on. Also, the Aussie dollar has been throwing out enormously good signals. In terms of directional correlation, that's something that you want to keep in mind. Now, one of the things that we noticed, the index futures, with the exception of the Chinese market, have been coming down. And also the German market has been doing quite well, the DAX. Fear inside the markets, the main markets, and also the crypto market are very high or very low at the moment. There's a lot of fear and very little optimism. I just want to take you back to the S&P 500 around April 24. As this was coming down, the S&P 500 was coming down. A lot of people were getting freaked out, and then what happened? It decided to go up and then come down again. Now, when it came down again, it was nearly at that 200 period moving average. A lot of people were just bailing on the markets at that time. And look what happened. This negative price action is the best thing that you can get in on, especially if you are a real investor. Now, what's the difference between a real investor and every other investor? Real investor is committed to what they're buying, like Michael Saylor with Bitcoin, or any other number of people. When you think about when prices come down, they say, boy, oh boy, I got a bargain, I'm getting in. But that's not what retail does. Retail are thrown by the myth that there is absolute certainty inside markets. Now, what certainty do people have right at the current time? Well, they've got the certainty that 1929 is coming and every single worst thing imaginable is coming, just like they were told back here, like they were told back here, like they were told back here. The issue is price is always moving in a wave. This is the ultimate time to get in. Of course, you can dollar cost average or buy at structural support levels, and that's the way to go. But don't be scared of the red. It's your friend. A lot of people will make their purchasing decisions based on the news. They'll read something like this. In yesterday's price action, we had this big green candle up. And guess what? People were really excited. And then we got a red candle. Now, why did we get that green candle? Because tariffs were paused. Why did we get this red candle? Because tariffs were paused. Hang on a second. How do we have the exact same reason for two different types of price action? Welcome to the news. Just ditch that. Look at the charts. Row 1 was already telling you we were in for some drama. Now, when we look at the S&P 500, are we out of the woods yet? Absolutely not. We've not crossed over. We've not got any real sign of positive price momentum at the current time. Is that a bad thing? No, not at all. It's not bad. This is fantastic. Just remember, price is always moving in waves. It's always up and down, up and down. This is the nature of price. When we get a lot of red, we're going to get a lot of green as well. But couldn't this fall off the planet? Couldn't it fall off the cliff like my favorite influencers are telling me? All you need to do is look at directional correlation and association across the cheat sheet. That will answer that question. This raises the point, what do you need to keep your eye on? I would suggest that you keep your eye on the futures of the major market indices. For example, when you look at Bitcoin and crypto and just think Bitcoin represents risk inside the markets. It's kind of like the VIX, but you can make a ton of money from it if you know what you're doing. And what do we see with the S&P 500 futures? It came down. What did Bitcoin do? It came down as well. We're noticing that it's coming up at the current time, but it came up here as well, and then reversed back. Now, what does this mean? What does it mean that you need to look at? You need to look at the potential momentum and follow through on where these index prices are going. If the indices turn around, we expect upward price momentum. If they start to falter, we expect Bitcoin to follow because this is what it's been doing. And Bitcoin cannot escape the stock market's gravity. Also, other exchanges cannot escape the US market's gravity either. Therefore, if anybody looks at the price of Bitcoin and says, I know Bitcoin, where it's going based on what Bitcoin is doing, well, that's not exactly entirely correct because you need the cheat sheet. You'll need to understand where row 1 is going, row 2 is going, row 3, row 4, row 5, row 6, and row 7. A lot of people say, oh, I can't really be bothered. I just want to look at my favorite chart. Say it's Doge or it's Solana or ADA, whatever it is. Or it could be Tesla or Nvidia or Apple. It doesn't matter. Could be gold. The real issue is that all financial markets move in an intercorrelated and interdependent fashion. Now, what does this mean? It means that we need to understand, is the top or bottom in on the VIX? Because that makes a big deal of difference. What about the DXY? Where is the top or bottom of that in a specific cycle, namely this one? The more that you get familiar with the cheat sheet components and being able to predict where the tops and bottoms are, the more money you will make. That's as simple as it gets. And always remember, the professionals do put in the work. That's what you need to do. At the time of this recording, we're just seeing a bit of a hell candle come through on crypto. specifically Bitcoin, but this will be a hell candle for all of the associated cryptos. Bitcoin is currently 87,141. Now what happened right here? The Japanese session opened up. Now what did that do to crypto? Well, it pretty much made it sell down. That's all there is to it. The Japanese market is really concerned. But if you actually look at it, it's something that we could predict because of the profiting course. You can see it right there. If you know what I'm talking about, put just in the comments, I know what you're talking about. Now, what we need to do is to observe this structure around the 85,728 mark. Typically, when you get a big bearish candle like this, it's typically going to have multi-candle follow through. So the 85,728 level is a really good level to watch. Now, why did this occur? The Japanese session tried to push price through the 90,922 mark, and it was just stopped dead. And we lost the 89,610, but we saw that there was a cut under anyway. So this particular fall through this negative CTKS gap, and it's overshot the 87,858 and found temporary support at that 86,768. One thing that you'll find when you're in financial markets for a long period of time, you need to know where the ceilings are and where the floors are. And it can't be just, I think it's here. You need the most statistically significant method that you can get. Now, another thing to do is to combine the CTKS method with moving averages. You can see the 200-day EMA is playing around that 85,728 level as well. So we may overshoot this, but a lot of buyers will come in again to seek to defend that mark. So please be aware of that. And remember back to yesterday's video, the DXY. I showed you just how much structural support was underneath, and there was no reason that anybody would think it would or could go up. Except for us, we know where the structure is. Let's have a little bit of a look through the liquidation heat map. We can see above that 91, say 91,300, there was a degree of liquidation, and now it's selling down on the 12-hour. Let's have a look at the 24-hour. It's just churning and burning down. No real structural support in terms, okay, we're getting into some here around that 86,281. You want high liquidation levels down here. Okay, this is a pretty good one, 86,134. And you can see how it's coinciding at the current time with a degree of structure down there. If we start to lose that, we've always got the 80,000 mark. Now, if you're trying to get into Bitcoin and crypto, you're getting bargain basement prices, and that's what you want if you're an investor. If you're a trader, this kind of whipsaw can have multi-leg follow through, so just be a little bit aware of that. So we're looking down to the 71. Now, what you will find is a lot of people will only look at one period, and they'll just say present this thing and say, oh, it's going definitely to 72,000. Well, if it's going to 72 or not is really structurally based. On the higher time frames, down here, the 1 year, what you're actually seeing is that there are a lot of people that went long. So these are long side liquidations. And on the shorter time frames, there's a lot of shorts up here. So this is buy side liquidity, because when they cover, they have to buy, and that pushes the price up. And when people see, oh, we got over the previous high, they all pile in. Buy side liquidity. This is more sell side liquidity at the current time. So around that 86,300 mark is the way that you want to look at how you would overlay the liquidation map with the structure, with indicators. I suggest that multi-prong attack because you must see what retail is doing. Don't disregard retail. We are not retail thinkers here, we're institutional thinkers. But because this is so red, it's going to disturb a lot of people, and you could well get follow through. So just around that 85 would be a very prime defense zone. That's from the negative side, but don't forget up around that 93,000. That's pretty much looking good above that recent high. So all you need to realistically do is to look to the lows, to the lows, to the lows. That's where all the retail just hang out together and wait to be absolutely decimated. So please don't do that. something under there, something under there, something under there, you get the idea. But it goes the other way, something above there, something above there, something above there. So we could see a real whipsaw inside the markets, and that's normal. This is crypto. But crypto market volatility is spreading to other markets. Just always keep in mind, price is always moving in a wave, and there are lots and lots of rules inside financial markets. The more rules you know, the more rules you understand, the better off you will be. This is a particularly important one. The biggest retail trap that we have is that people look to the news and say, oh, I'm getting in. Texas passed its Bitcoin strategic reserve bill 25-5, but just note the governor must pass it into law. But this is pretty good stuff. When we think about countries all around the world and specific states, they're going to do this more and more. And Bitcoin is actually the 9th largest asset class out there. It will definitely overtake gold at some stage. And when it does, there's a very hefty 10x in the price. So if you think these prices are a lot, they're not a lot at all. And the really cool thing, I just did a refresh, the really cool thing is the lower this price gets, and our target is taking out gold's market cap, and we will do it, definitely. Whoa, that is superb. We're talking about Bitcoin being $1 million per Bitcoin. The thing to note is the trade wars are on the agenda, but we've had trade wars in the past and they recover over time. So just bear this in mind. I would suggest just keeping your eyes on the major indices, especially the other countries. It can be a really good way. It's like you could look at Bitcoin and Ethereum and then look at Doge and Solana or ADA or XRP, whatever it is, to gain some kind of idea, as they're more sensitive to price fluctuations than the biggest. For example, Bitcoin. It's like the Titanic when it moves. Also, the thing to remember, when we get a lot of panic inside the market, it's possible to break through multiple structural zones, but these structural zones will normalize price over the long run. Each month, I draw these service lines up, called CTKS paths. These paths give normalized price momentum and structurally bound. Even though Bitcoin was released, we saw it spiked up and then spiked back to the normalized price path. It's just a little bit below it at the moment, but you can see how it hovers about. If, for example, I tried to follow price with this price path, I would have something completely meaningless. You must always do your price paths from a structural perspective, not a price perspective. And remember, the focus of doing these paths is to predict the end of month price and a potential path to get there as well. And just remember, TradingView has stopped me updating from February to March, so this means that I can't update any of these things. TradingView is really good at introducing new features that sometimes actually just don't work. But I've reached out to support to see if we can get it all fixed up for you. So just remember, all of the indicators have been released, and in the next 24 hours, the service video will come out for the next month. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.